Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name's Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. We've got a familiar face returning to the show today, a man that needs no introduction. JC Parets of All-Star Charts is going to be joining us to share his take on the markets. It's always a fun conversation with JC, so you won't want to miss it. But before we talk to him, it's Friday. We've got a long weekend to look forward to, and the markets are closed. So let's take a quick look at how this week played out. This week was really driven by the strength in tech. The NASDAQ was the clear leader, rising more than 3.5% to a new 52-week high. The S&P 500 and Russell were pretty flat, and coming in last place was the Dow, falling more than 1%. So basically, the more tech exposure, the better the index did this week. Taking a closer look at the S&P 500, it looked like we were about to have a failed breakout around that 4,200 level earlier in the week. But that monster move from NVIDIA on Thursday really saved it, and we finally got a weekly close above that notorious level for the first time in 9 months. The bulls really need to see 4,200 start acting as support now. If it does, the August highs around 4,300 are the next upside objective to watch. So it's been a slow repair process, but definitely some constructive action, especially later in the week. Taking a quick look at sector performance, only 3 of the 11 sectors closed higher. As we mentioned, tech was the clear winner, rising more than 4.5%. But you also had sectors like communications and consumer discretionary gaining this week. So even though it was only 3 sectors that closed higher, these are the largest and most important sectors. And the bulls want to see them do well, and they are. On the other hand, consumer staples lagged this week, falling more than 3%. Anyway, that's enough from me. Let's see what JC has to say about this market. All right, JC, happy Friday, and welcome to the show.
Good to be here, Pat. What's happening?
Oh, not much. I've been seeing a lot of you this week. You guys have this new morning show. It's awesome. It's live. You guys have some great guests. I'm very bullish of the morning show. So could you tell us a little bit more about it?
Yeah, listen, it's something that we've thought about for a long time, kind of just came about. We would have a lot of meetings in the mornings, and, we were day trading with Kimmy in the mornings, and it was kind of just like, we were always doing this anyway. So we were like, well, since we have Spencer here to kind of keep us in line so that we're not going all over the place and we kind of stick to a good schedule, it's great. Straz and I are on there. We're doing this work anyway. We're going through the daily chart report, which is a daily segment. We're going through the hot corner, which are the big insider transactions from the prior day, whether they're executives or senators, House of Representatives, 13D filings from different hedge funds and things of that nature. So these are the things that we're talking about anyway. The morning movers, who's gapping down, who's gapping up. We just saw NVIDIA up like $200 billion overnight. You're seeing monster moves. So every single day to the downside, to the upside. And then we have guests, right? We had Todd Sohn on this week. You dropped by earlier in the week. John Netto talking about trading the different FOMC minutes and different economic events and things like that. So constant conversation about what's happening in the market. And again, for us, it's easy because we're doing this anyway. So we might as well hit the record button, invite everybody to join us. And then we get feedback in the chat. We get questions. It gives us more things to talk about, more things to look at, right? And one thing we've learned, Pat, over many years is that our audience is the smart money. Our audience is really, really smart and experienced. And then sure, there are newcomers. There are people that are still learning, but you'd be surprised. Even they are able to contribute to the conversation and really help us out and point us to things that maybe we weren't seeing,
Yeah, I had a great time on it. I love that aspect where you guys have the chat there. People can chime in with questions. So if you guys haven't watched already, it's every day in the morning. What time does it start, JC?
8:30 a.m. Eastern time, all the way to 10. So we trade through the open, through the first half an hour. It's pretty cool.
Yeah, and you guys have Spencer producing it. Spencer Israel. I've been getting a lot of questions about him. He used to do the Benzinga pre-market show, right?
Yep.
Which was obviously a big hit. So you guys are very lucky to have him there, right?
No, he's great. Like I said, he keeps us in line. Sometimes Straz and I get excited when we have a certain guest on. We want to keep asking him questions. Spencer's like, all right, guys, we got to go, say goodbye, but he's good, and Spencer brings a different sort of twist to the market. He's more, fundamentals and news oriented as opposed to as strict to price behavior that some of the rest of us are. So it's a nice compliment to what we're doing.
Absolutely. Well, let's dive right in. It was one heck of a week, right? I mean, you had the NASDAQ going out on new 52-week highs, S&P 500, new 9-month highs, right? And the last time you were on the show was at the end of last year, and you were pretty bullish, right? You mentioned, I asked you what the most important charts you're watching were, and you mentioned financials and the Russell 2000. Both have a similar look to them. And, we recently retested those levels, but they're holding again, right?
Yeah.
So what do you think here? If I were to ask you what the most important chart is now on your radar, what would you say?
Well, these are probably two pretty important ones. First of all, NASDAQ making new 52-week highs, S&P 500 making new 9-month highs. The NASDAQ 100 is still 16% from new all-time highs. Dow's about 11% from new all-time highs. Meanwhile, Germany, France, UK, Denmark, all making new all-time highs already. You got Japan making new 30-year highs. So how long does it take the United States to catch up? I would say what we're seeing is certainly a step in the right direction. But if you want to point to the small caps and the financials, I still think they need to be front and center from a risk management standpoint, because, just because we're seeing quote unquote narrow leadership, it's not so much narrow. We're not seeing broad leadership. Like every sector can't outperform, right? The sectors that are outperformed by definition, the sectors that are outperforming are technology and growth and communications. I mean, these are the stocks that are doing well. Places like consumer staples, utilities, healthcare, low volatility stocks, all of these are making new 52-week lows relative to the rest of the market. Those are characteristics of healthy market environments. So I'm looking for some kind of rotation into some more cyclical groups like financials, like small caps, which are at last summer's lows. They've held so far, but I think they really need to hold it. If we start taking out last summer's lows to the downside, I have a hard time believing that we're in a healthy market environment overall. I think stocks are probably under pressure and those names are dragging the market down. But we haven't seen that at all. We're seeing leadership. Now do we get the rotation? I'm looking at small caps and financials. You can even throw industrials in there as well. You could probably throw emerging markets. These are pockets of the overall equities market that are just not participating, at least over the last 4, 5, 6 months have not participated, certainly not to the degree that some growth stocks. But let's keep in mind that interest rates, peaked in Q4. And since interest rates have been falling, stocks did very well in that environment. But interest rates have been going up over the last couple of weeks. And these tech stocks and these growth stocks have continued to do well, even in the face of a rising rate environment, like, 8 days in a row or something. The 10-year was up. So I'm a little bit surprised at just how well tech and growth is doing, despite, sort of the resiliency in interest rates. So do we get the rotation, right? Do we finally get the rotation into the types of stocks that historically do well when rates are rising? Things like energy and financials, things like industrials, materials, and other cyclical areas of the market. You can argue semiconductors are cyclical, right? It's the cyclical part of growth, if you will, is sort of what they tell me. Or maybe this could be a unique circumstance with AI. I mean, who knows? But the point is, the types of stocks that should be doing well in a healthy stock market environment that's semiconductors. So let's see if the others join the party. That's front and center.
Yeah, I was pretty surprised to see tech do so well in the face of, we saw 2-month highs in both the dollar and rates. So would you expect, growth in tech, some of those areas to come under pressure here, or, we'll just kind of wait and see? My suspicion, if you would have told me 2 weeks ago that the dollar and rates would be doing what they're doing, I certainly would not have said that technology is outperforming to as much as it is, like in historic fashion. I wouldn't have expected that at all. It's actually really interesting. So the question becomes, all right, do interest rates just kind of keep churning sideways? Because that could be it, right? So like interest rates are up over the last couple of weeks, but they're kind of just like in the middle of a range, like off the lows of the range, but still in a range.
And that's what the stock market likes, right? The stock market just doesn't want very fast, aggressive movements in rates in either direction, right? It's not like higher rates are bad for the market, lower rates are bad for the market. It's more like steady rates are what is good for the market. And that's what we've seen, even though. So the other one that I would point out is the US dollar, right? The US dollar has again seen a little bit of a bid over the last couple of weeks.
Again, 2-month highs. We're above that 103 level. For some people, it's 105. Ian and I have debated that one a little bit, but what do you think? What's your line in the sand?
Yeah, I don't think that that's sustainable. I talk with smart friends and be like, correlations are changing. That's it. Correlations changed. Growth stocks could go up with rising rates. Stocks in general can continue to do well with a rising dollar. I'm not convinced of that. I think there's going to be some reversion of some kind. Maybe rates in the dollar are right. Stocks catch down. That's certainly a possibility. Or maybe we start to see some dollars under pressure, a little bit of a bid in bonds while stocks continue. But I think if rates remain in this range, I think that's good for stocks. It's the dollar, man. I just don't. I don't think the correlation's changed. If stocks continue to do well, I don't think the dollar's ripping in that environment.
I see. Well, you shared this chart right here on my screen earlier, and you said it's some important trends here. So I'm wondering if you could break it down for us real quick.
Sure. So up on top of the blue line is the S&P relative to low volatility. So that's the low volatility's relative strength upside down. So as the blue line is going up, that's low volatility making new relative lows, which is something that happens in healthy stock market environments. Same thing with consumer staples, right? Which are low volatility stocks, just a different way to show something similar. Again, new highs in the black line means new relative lows in consumer staples on a relative basis. So those are the types of stocks that do well when stocks are under pressure. Consumer staples, low volatility. The fact that they're making new 52-week lows relative to the market. In other words, both these charts are making new 52-week highs. That's positive for the market. Look below, you can see technology overlaid with the S&P 500. Technology is 26.4% of the S&P. It's a monster component making new 52-week highs. So you see these three lines above all making new 52-week highs. What do you think the S&P is going to do? You think the S&P is going to break down to new lows? I don't see it. These lines above are going up. The S&P is going up with it.
Well, so JC, obviously the big story this week was NVIDIA. It added what, 200 billion in market cap, something like that?
No big deal.
You got any good stats for us there? I mean, put into context how big of a move that was and the implications for the market. I mean, there's been so much ink spilled over regional banks and, is that going to be a contagion and all that? Mm-hmm. But then you see a move like this. What does that say to you?
Yeah, I mean, for me, if you would have told me Silicon Valley Bank and First Republic would have disappeared, I would have guessed that the market would have cared, but the market didn't care at all. Market did not matter one bit. So if the market doesn't care, I definitely don't care. Especially when these things are like a billion, few $1 billion companies, it's nothing. NVIDIA was up 200 billion overnight. And a few weeks back when everyone was bugging out about these banks that no one's ever heard of, Microsoft was up like $150 billion overnight. So it's not like this is out of nowhere. Like this is becoming kind of like a theme. We keep seeing this again and again. So massive market capitalization increase, 200 billion. There are only like 30 stocks that trade in America that are bigger than what NVIDIA was up overnight. Like just to put things in perspective.
What do you think? Do you think it's a bubble? AI? I mean, and where do you think NVIDIA is headed next?
Listen, I hope it's a bubble. Bubbles are great, man. I feel like bubbles are not embraced enough. I don't know what everyone's so angry about. It's a bubble. Good. I hope it is. Bubbles are great time, like maybe it is, maybe it's not. I'll tell you this much. The Nasdaq's still 16% from a new all-time high. So it would be the first bubble in history that still hasn't gotten back to its former high. So, for me, I hope it is a bubble. That means that we got a long way to go because this is just the beginning if it is. So I'm all for it. I'm a huge fan of bubbles. The way I learned it, I think it was George Soros who said, if you see a bubble, you go buy it right away. Are you kidding me?
Yeah, when I see a bubble forming, I rush to buy. That's the Soros quote right there.
Yeah, so I hope it is. But 200 billion overnight. That's Micron plus Intel, right? So NVIDIA grew in an Intel and a Micron overnight.
So it is a lot of these mega caps leading, right? Like you have the Microsofts of the world, the Apples, NVIDIA, and there's a lot of concern over that, obviously. But this one surprised me a bit. You have equally weighted technology. That's working there, right?
Nobody should be concerned because the best companies in the world keep getting better. Like, that is not a reason for concern. Like, the best companies in the best countries should be doing well. You know, the world has never been a better place, right? Contrary to popular belief, I don't know what people are so angry about. The world's never been a better place, and good companies keep getting better and keep growing in value. Why would anybody be concerned about that? Number one. Number two, oh, JC, it's only 5 stocks that are driving the market. First of all, it's not just 5 stocks, right? We have the math, right? In this case, you're looking at an equally weighted index of technology, equally weighted, meaning that those 5 stocks that you're talking about have an equal weighting with everybody else, and it's still making new 52-week highs. Number one, those 5 stocks that people keep telling me about, Germany's making all-time highs, France is making all-time highs, Denmark, Japan making new 30-year highs. Are those 5 stocks in any of those indexes, right? Obviously not, right? These are American stocks. So the whole, it's only 5 stocks, that's nonsense. I understand that you can reverse engineer the performance of the cap weighted index, take the performance of these largest components and reverse engineer, saying that all of the returns are driven by these stocks. Yeah, any idiot can do that. But if you go stock by stock, you know that's just funny math, right? Like, that doesn't make any sense. It doesn't matter, right? That reverse engineering of the returns year to date is so stupid. We have the data. We know it's not just 5 stocks. It's a lot more than those. And if you just took 2 seconds to just go chart by chart, stock by stock throughout the market, you're going to see a lot of them going up. Some of them are going sideways. There's a few of them that might even be going down, but most of them are going up, and they have been since last summer. So, you know, when people are like, oh, when's the market going to bottom? It's like, when's the market going to bottom? Bro, you missed that one.
Well, listen, you mentioned international and, of course, the strength in Japan, and that was a big story this week. Of course, it got kind of overshadowed by all the excitement that was going on in tech and, of course, NVIDIA. But 33-year highs for the Nikkei. We don't talk about 33-year highs too often, right? It's just not something you see too often.
Well, first of all, how many assets are there that still haven't gotten back to a high that they haven't seen in 30 years? So there's that.
Great point. That's a great point. I mean, you mentioned Newmont. That's a famous one right there. Still hasn't cracked that 87 high, right?
Yeah.
But so what do you think? Do you think the strength out of Japan continues? And if so, how do U.S. investors play this theme?
Well, I mean, the DXJ has just been a great one. This is a Japan ETF wisdom tree priced in local currency. This thing's been working for a while. Like, we're talking about all these all-time highs and everything these days. This thing's been making all-time highs for 2 years already. So it's not anything new at all. People are like, oh, but it's priced in local currency. It's like, yeah, it is priced in local currency. That doesn't mean that investors need to give the profits back, right? Just understand what it is. You know, a lot of things priced in yen look good, but this ETF is specifically designed for that. Wisdom Tree did a heck of a job. You know, our target all along has been 77. Here we are today. So, you know, I think some digestion in here, I think is perfectly warranted. We're talking about a huge base. So I'd be a buyer of consolidation. If you start to see this holding above 78, you know, maybe we can get long again for another position. The trend here is higher. I don't necessarily know that I'd chase it, considering this was our short-term target. Literally, it's the 161.8% extension of the entire decline during the Great Financial Crisis. This is the extension from there. So, you know, for us, you know, nice mission accomplished. Doesn't mean the trend is over, because the market, of course, does not care what JC's short-term target is. The market is going to do what the market wants to do. And my suspicion is this thing's probably going to go a lot higher. So we'll watch and see if we get some kind of consolidation up here. Again, well-deserved breather up here. Let's see if we get it. Maybe we buy it for another trade back up to 100, 110.
Well, I'm wondering if you could talk about it a little bit more, because, you know, one thing you do hear in relation to these new highs in the Nikkei is that, oh, you know, you mentioned it. Oh, that's priced in yen. You know, who here is buying it in yen, all that. And so explain a little bit more about DXJ and why that might be a vehicle for U.S. investors.
Well, you know, not to, you know, we're friends with the Wisdom Tree cats, so it's all good. I'm happy to give them some love, but they just, you know, they recognize an opportunity where there is a unique situation in Japan, where the currencies was making new 20-year lows last year versus the U.S. dollar. So if you can price your ETF, or that ETF is going to profit from that particular currency weakening, why not? Now you're getting the numerator going up, you're getting the denominator going down. Like, that's great. And that's what DXJ has really done here, as opposed to EWJ. And EWJ is a different fund family, if I'm not mistaken. EWJ, and this is priced in US dollars. This is iShares. So DXJ is Wisdom Tree, EWJ is iShares, and then this is going to be priced in United States dollar, and it's not, you're going to see not nowhere near as strong because, of course, the dollar, particularly versus the yen, had been strong for so long, with the yen making new 20-year lows. But even with the dollar coming off over the last couple of quarters, DXJ remains strong because the numerator, Japanese stocks, keep doing well.
Yeah, and you mentioned it was kind of near your target already, so maybe not a great time to be jumping in, but the trend is higher. Is that correct?
Yeah, the trend is most definitely higher. Take a look at names like Toyota, take a look at Honda, take a look at Sony. If Sony's above 95, there's a few names in there. Mitsubishi Financial, still kind of basing, give that one some time, but there's some opportunities in Japan.
Have you looked at Nintendo in a while? I know for a while there, maybe it was a year or two ago, it had this nice base, but it didn't go.
Nintendo's one of those over-the-counter stocks that that trade in Japan. One thing that I've learned is, just because it's over-the-counter, it's OTC, don't ignore it, because you're going to get some big companies like Nintendo. It's below overhead supply, right? These are the 2007 highs. We got back up there in 2020. Give it some time. I ultimately think Nintendo does break out, right? But I would be a little bit patient. For you, William O'Neill aficionados, Nintendo looks a little cup and handling, so let the handle finish.
Yeah, like I said, I haven't looked at that one in a while, but you still look good. But JC, before I let you go, it's Friday, right before a long weekend. Stock market's closed on Monday, but the crypto markets are open these next 3 days. So let's take a look at crypto. I want to get your thoughts on it. I know it's an area that you watch pretty closely. We kind of seem to be bumping our head against 30,000, and I don't think that's a big surprise to anyone. Those were the former lows, but what are you watching as far as crypto right now?
Yeah, I mean, for me, this 29,000 to 31,000 or so, that's the level that I'm watching. These are the former support levels, as you could see there, from early 2021, 2020, 2021. You've seen that broke last year. Now we're back to the scene of the crime. All that former support turning into resistance. You're seeing it. And if you want to zoom in to the quote unquote head and shoulders top that we're seeing in Bitcoin, I don't know if you got the zoomed in chart.
We'll throw it up. Yeah,
we'll throw it up. People are calling this a head and shoulders top. I think it's a consolidation. I think we rip. And if we're able to break out back above 31,000, if we can take out those April highs, I got to tell you, Pat, I don't just think this gets back to 65. I think we go to 100, 120.
Yeah. Well, so what about the downside? What if we're wrong here? And what level are you watching for your?
This thing could go to zero. I mean, there's no question. No, for me, when we broke out above 20,000, that was a big one. That's when I got in. I'm looking to add to my positions very aggressively. So if we're able to take out those April highs, so for me, that's what it is. If you start losing those late 2017, early 2018 highs, right around 20,000 or so. If we're below 20, it's not for me. So we're kind of in the middle. But I'll put on a very aggressive position, and we're back above 31. No question.
Yeah, and you mentioned that some of the correlations we've been seeing the past year or so have kind of been breaking down a bit, or at least they haven't been as strong as we had been seeing. And I think Bitcoin is one of them, right? I mean, you saw this thing trading pretty much right in line with the NASDAQ and tech stocks last year, but it's kind of gone its separate ways in the last couple months. Is that right?
Yeah, I mean, I got to tell you, this is one of the divergences that is front and center for me. You continue to get new 52-week highs out of technology stocks, semiconductors, rotation into internet, software. You continue to see that, like, those growthy, long duration areas, but you're just not seeing it in Bitcoin. Maybe you're just not seeing it in Bitcoin yet. And, like getting back to the correlations with rates and the dollar, I'm not ready to kind of just throw in the towel and say that the correlations have now changed because we had a couple of weeks of divergence. To me, I think something's got to give. Either technology's gotten ahead of itself and it needs to revert, or Bitcoin plays catch up. I think it's the latter.
Good stuff. Well, JC, you got any big Memorial Day plans?
Oh, I got to go to the old fish market. I'm going to get myself 200 clams.
Oh my gosh. You got people coming over? It's a lot of clams.
I mean, you'd be surprised how fast you could put down clams. I could put down 30, 40 clams without even thinking about it. Like, clams are so little. And then if you got
how do you make them?
I just throw them on the grill. What do you mean?
Throw them right on the grill?
Throw them right on the grill. Oh, I got a great Portuguese fish market by me. So I get them by the bag, 200, and then just put them on. And then, you kind of top them off with, as soon as they open, they're ready to eat. You just top them off with a little butter, maybe some, some pepper, some Italian seasoning or something like that.
What wine are you pairing with that?
Oh, with clams, I think you got to go white Burgundy, not Chablis, but from like a Côte d'Or, white Burgundy all day. I shouldn't say that. You could go Muscadet from Nantes, like on the lees, Muscadet on the lees. You're going to get that mouth, that viscosity that goes so well with something like clams or oysters or any kind of shellfish. So on Muscadet, I'm going to go with white Burgundy, but you could go Muscadet also.
Oh man, you lost me at Muscadet, but you heard it here first. Clam bake at JC's.
Yeah, man, right on the grill. It's awesome. Grilled clams.
Well, good stuff. I hope you enjoy it and have a great long weekend.
All right, adios.
Cheers. Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week.